A significant decision has sent ripples through the global food supply chain. The United States, a massive consumer of chili peppers, recently implemented a stringent ban on several large shipments from key international suppliers. This wasn't a quiet policy shift, it was a bold, public declaration aimed at safeguarding American consumers. The move effectively closed the door on tons of peppers poised to enter the United States market, creating an immediate and noticeable void. For kitchens and restaurants across the nation, a staple ingredient was suddenly in question: New York City, Los Angeles. At both ends of the country, the staple was suddenly in question. The implications were felt almost overnight, as supply chains scrambled to understand the full scope and what it would mean for their businesses and customers. This development didn't happen in a vacuum. It followed escalating concerns from United States regulatory bodies. The reasons behind the United States' rejection of these chili shipments were not arbitrary. They were rooted in concrete scientific data and public health concerns. The primary red flag raised by the Food and Drug Administration was the detection of unauthorized pesticides at levels exceeding United States legal limits. These chemicals, while perhaps permitted in other countries, are strictly regulated in the United States to protect consumers. Beyond chemical contamination, there were also significant concerns about microbial pathogens. Routine testing revealed harmful bacteria, including Salmonella. Salmonella contamination is a serious public health threat, causing severe foodborne illness, hospitalizations, and in some cases, death. The discovery of such pathogens on raw agricultural products signals a failure in sanitation and handling. Each positive bacterial test bolstered the case for the ban. Quality control issues compounded the problem: mold, rot, pest infestation, evidence of poor harvesting, inadequate storage, and flawed transportation. Finally, traceability, or its absence, was a major factor. Regulators often couldn't trace peppers back to a specific farm or region. Without clear documentation, it was impossible to isolate contamination, and that uncertainty forced broader rejections and ultimately a wider ban. Transparent traceability is a cornerstone of food safety. The immediate aftermath of the United States import ban created a starkly different reality on either side of the border. For United States businesses, the situation was chaotic. Food manufacturers were hit hard. Hot sauce, salsa, production lines calibrated for specific peppers were suddenly at a standstill. Companies frantically searched for domestic alternatives, but the United States chili industry could not instantly scale up. This led to price spikes. Small and medium businesses were hit hardest, lacking purchasing power to compete. For international exporters whose shipments were rejected, the financial blow was devastating. Entire harvests became worthless or had to be rerouted at a loss. Farmers faced potential bankruptcy. The ban exposed vulnerability of relying heavily on a single export market. Meanwhile, just south of the border, Mexican chili exporters saw not a crisis but a golden opportunity. Agricultural groups and government agencies moved quickly to step in as reliable, high-quality suppliers. A surge in inquiries from American buyers set the stage for a strategic pivot that would reshape the North American chili trade for years to come. Faced with a unique market opening, Mexico's chili industry did not just aim to sell more peppers, it aimed to sell better peppers. They launched a nationwide initiative focused on reinforcing and promoting rigorous cultivation standards, massive educational campaigns for farmers, emphasizing pesticide use, water management, and soil health, ensuring calibrated, safe application. The goal was to ensure every chili exported from Mexico would meet or exceed US FDA requirements. A key part of the strategy was rapid expansion and promotion of certifications, global GAP, and other third-party audits. These certifications provide a third-party guarantee that farms follow strict protocols. Safety, sustainability, and traceability became centerpieces of the export push. Barcode scanning and digital traceability platforms tracked every crate from field to border. By showcasing credentials, Mexican exporters offered American buyers peace of mind, selling not just product, but confidence. The Mexican government worked with the private sector to bolster inspection and testing capacity, investing in labs and digital platforms. With reinforced commitment to quality and safety, Mexican chili producers were perfectly positioned to capitalize on the US market gap. What followed were landmark trade deals, multi-year billion-dollar commitments to secure a steady flow of high-quality chilies. These deals provided growers with financial security and capital to invest in infrastructure and technology. In the year following US import restrictions, Mexico's chili exports to the United States surged by over 40%. Premium varieties, habaneros, serranos, chiltepins, saw their value increase dramatically. Mexican peppers became a premium brand. American companies were willing to pay top dollar for assurance of safety, quality, and reliability. This boom transformed communities in Chihuahua, Sinaloa, Zacatecas, creating thousands of jobs across farming, processing, logistics, and tech. Investment-funded greenhouses, automated packing, improved irrigation, creating a virtuous cycle of higher quality and yields. The success of these deals solidified strategic partnerships between U.S. buyers and Mexican suppliers, evolving from transactional to collaborative. Shared data on consumer trends allowed farmers to tailor crops and ensured secure, on-time shipments, cementing Mexico's place as North America's chili leader. When comparing the chili industries of the United States and Mexico, one must look at scale, diversity, and approach. The United States industry is technologically advanced and efficient, producing large quantities of specific standardized varieties like New Mexico green chile and cayenne, but constrained by higher labor costs and shorter seasons. Mexico boasts immense scale and incredible diversity, with climates that allow year-round cultivation and lower labor costs. It cultivates dozens of varieties not grown commercially in the U.S., smoky chipotle, fruity manzano, and many niche types. The U.S. excels in processed pepper products like paprika and chili powder, while Mexico dominates the fresh and dried whole pepper market for the United States. The recent ban forced U.S. buyers to recognize Mexico's package, massive scale, unparalleled variety, and verifiable quality. Mexico paired natural advantages with strategic investments in modern practices, while the U.S. could not replicate scale quickly. Ultimately, the industries are complementary: U.S. niche processing and Mexico's diverse, reliable fresh supply. The U.S. ban entrenched reliance on Mexico for a broad, consistent, safe supply of fresh chilies. The tale is one of specialization. Recent events clarified and deepened Mexico's specialized role as an indispensable partner. These developments have permanently redrawn the map of the global chili trade. The United States market's shift sends a powerful message to exporters worldwide: food safety standards are not negotiable. The era of competing on low cost is over. The new era is about competing on trust, transparent supply chains, and verifiable certifications. For American consumers, this means a more secure but potentially less diverse short-term supply, and prices may stabilize at a higher baseline reflecting safety costs. Technology, blockchain, IoT sensors, analytics, will play an even bigger role in ensuring traceability and integrity from farm to fork. We may see the rise of regional quality hubs where neighboring countries collaborate to meet major importers' standards. In conclusion, what started as a food safety crisis evolved into a major realignment of a multi-billion-dollar industry. The U.S. ban was the catalyst, but Mexico's strategic response was the true story. By embracing quality and safety, Mexico not only filled a market void but elevated its status as a premier supplier, building a new spice route founded on safety, trust, and collaboration. This pivotal moment will shape the future of the chili trade, and much of the global food trade for years to come.